So your next guest anticipates significant policy shifts ahead. Joining us now is RBC Capital Markets head of commodity strategy, notorious smiler, Helima Croft, who said she would have come down had she known I was filling in today. Helima, it's great to see you nonetheless. Here's the question. Are those policy shifts significant? Are they going to be President Trump saying, drill, baby, drill? Because if so, maybe we go to 50 or 60 bucks a barrel. Or does he realize that higher prices actually do make a difference for U.S. companies?
So, Brian, I think he's obviously going to say, drill, baby, drill. We have our incoming Treasury Secretary talking about the threes. But the question is, are U.S. producers prepared to unleash a flood of oil this year? Brian, you hear it, I hear it. They still talk about capital discipline for 2025. So the question is, are we having to look to other, stories in the Trump choose your own adventure for energy? Should we be thinking about what does a return of maximum pressure sanctions on Iran mean? I think that is potentially the biggest upside catalyst for oil next year. Incoming administration officials are saying we're going to look to remove, potentially 750,000 a million barrels of Iranian oil off the market. That's pretty significant. They have the sanctions bandwidth to do so. What happens on China, though? I think China is actually probably the biggest bearish for oil markets. I mean, if we do have significant tariff pressure, is that 5 to 7 or more down in terms of the oil price? So we just have to see what is going to be the dominant policy trajectory when it comes to Trump and energy.
Also, what is going to be the relationship with Saudi Arabia and OPEC? And I'll tell you what, a lot of people want to knock OPEC. You and I talk about it a lot. But I will say this, the price of a barrel of crude oil in September of 2021 was $70 a barrel. We obviously had a spike when there was the invasion of Ukraine. Guess what the price of a barrel of oil is right now? $70. So outside of that exogenous event, the invasion of Ukraine by Russia, the price of crude oil has remained relatively calm. What do you think the president's relationship going to be with Saudi Arabia and OPEC vis-a-vis U.S. production?
I mean, remarkably stable oil prices is absolutely what we've seen in this sort of OPEC era of managing the market. The question is going to be, if you do have maximum pressure coming back on Iran, if you do have them essentially saying, hey, any foreign port, if you take Iranian barrels, we're going to sanction you. It's the SHIP Act gives the ability to do so. Are they going to turn to OPEC and say, okay, we've basically taken Iranian barrels off the market. We want more barrels from you. Remember, Brian, in 2018, that infamous June OPEC meeting, we had exited the JCPOA nuclear agreement. We asked Saudi for an additional 1 million barrels. They provided it, and yet we gave exemptions from importers of Iranian oil in October, and prices crashed into the 30s. So the question is, would OPEC be willing to give more barrels just because there's an announced policy shift? Or are they going to wait to see an actual disruption? And also remember, Brian, Saudi Arabia actually has normalized relations with Iran. They did that in March of 23. And so the question is, do they want to get crosswise with the Iranians, who are looking significantly weaker than they have ever? But the question is, do you still want to fight with them at this stage?
Why do you think, if it's the biggest upside risk for the market, the maximum pressure campaign from the Trump administration on Iran, why is it not in the price? Because we have heard him and a number of the people he is appointing to these key roles pretty much confirm that that's where they're heading.
Absolutely. I mean, they have been completely transparent that this policy is coming. So I think that market participants got burned betting on a Russian disruption that didn't materialize. I think they got burned betting on some type of disruption coming out of this war in the Middle East. And so they're very much in the show me the barrels mode. We will price this when we see this. Even if you look at our forecast, Sarah, we have not removed yet 750,000 to 1 million barrels because, again, we've had these events in the Middle East. We've had the Russia war that hasn't led to a disruption. So we'll take those barrels out once the policy is announced. And I think that's where market participants are as well. I think some are expecting an OPEC offsite to be basically a simultaneous offset. Again, we think OPEC will be in watch and wait mode to see if there is a serious disruption. And then that will have to be a conversation between Riyadh and Washington.
Yeah, I can't see anything changing with OPEC. The last meeting obviously went virtual. Let's wait for that meeting to happen, and then we'll see. Helima Croft, great to see you, as always, even remotely. Have a happy New Year. Always love your intake.
Thank you so much, Brian and Sarah. Happy New Year.